Well, last week it was coronavirus, and this week it's coronavirus, and oil price collapse. I'm Peter Switzer.
I'm Paul Rickard.
And we're really mad about money. Well, I'm mad, Paul, because I'm a bit poorer now.
We don't sound very mad.
Oh,
Obviously, we're a little bit less wealthy, more poorer on Monday.
On paper.
On paper, at least, after a big move in the market. We've seen the rebound yesterday. Wall Street last night. I'm thinking our market will probably struggle a little bit today.
Yeah.
Maybe open a bit higher, but I'm not sure. But I think the old dead cat bounce, it strikes me a bit of that the last 24 hours.
Look, I've been asked on Sky and radio, is this the worst over? Look, I think the worst is over in the sense I'm not expecting another huge fall of the stock market. Where American market was down 19% after last night, it was down about 15%. I think we could see another 5 or 6% fall, and we'll oscillate between over 20% down and back. I think the bottoming process will start now, but we're in the hands of the coronavirus. If the infection rates and death rates scare the world, the market goes down. If it doesn't, this fiscal stimulus will help offset the stock market falls.
Yeah, and look, normally we see a couple of months of extreme volatility. We're sort of about 2 or 3 weeks in.
Yeah.
Probably a little more to happen. We do need a bottoming process first. I'm not sure it's going to be a straight immediate V here. As you say, Peter, again, there's a whole lot of bits that are a little different this time. It's always different this time round. Yeah. It's more a supply issue rather than a demand issue. Most of the government response is going to be on the demand focus because they can't do much about the supply. You read the stats coming out of China, it looks like, there's some positive signs there. Yeah. At the same time, you've got places like Europe, where the contagion is spreading. But so more to happen. Obviously the throw on that, we had the oil price, which is not so much about the oil price. The lower oil price should be good for everybody. It's about poor old energy producers and a whole lot of issues around in the credit markets.
Is it a Russian conspiracy to bring down Donald Trump and US oil?
Well, there's certainly people saying that it's a Chinese conspiracy to challenge the Western world.
Yeah.
Those
people should be locked up.
As those people probably should be locked up, the oil price is again around... the thing is that the Saudis and OPEC have been working really well with the non-OPEC members like Russia and doing a really good job to manage supply over the last couple of years. That's why the oil price had basically found a bottom at $50, right? Yeah. It hadn't really, every time it had just blipped under, came back over. Yeah. We've had a breakdown on the supply issue where suddenly, the Russians don't want to play ball, Saudis want to teach them a lesson. How that's going to play out, we don't know. We do know that in the US, a lot of the shale oil producers, the US is self-sufficient in oil. It's actually an oil exporter.
Biggest oil producer in the world
But they've got a very high cost base. Yeah. So you'd expect at some stage the shale oil producers to be under pressure. Yeah. That's what's happening in the credit, partly the impact of the credit markets with the price and the oil price going down. How that plays out, I think Donald's got to get here and do you think beat some sense into both of them?
Yeah, go Donald. Now, question then. Is this a buying opportunity now, Paul, or do you wait?
Look, I think in this sort of type of environment, you have to use the dips to buy, right? You're not going to pick the bottom, and you don't necessarily need to chase it in the inevitable sort of rebounds. But when the market is in free fall, that's the time for the courageous, and you got to buy and just you realise you're not going to get the bottom, right? You will never get the bottom.
Courageous Corona stock buyers.
Yeah. I bought a little bit as it's turned out it's too early, but you get the rebounds and you're suddenly back in the money. I do think that what we have seen is clearly all the so-called super defensives and the stocks people wanted to buy, the CSLs and the zeros, they held up best. Yeah. We did get finally on Monday a bit of a breakdown on that because they just got so expensive, but again, they rebounded the hardest. So look at what went up yesterday. CSL's still higher on the month. I was actually doing my portfolio. Look at the stocks that are higher in this month in March. You've got CSL, Zero, A2 Milk. There's quite a few of them. Even Commonwealth Bank has been one of the best performers of the bank. So there are opportunities there. There are also some stocks that are super cheap. There are some that are still expensive that you probably should sell.
Those stocks are like the Praetorian Guard in your portfolio, aren't they?
Well, we do find a lot of mispricing, Peter, and there are stocks out there that just haven't gone down enough. So the best examples of these, Peter, are some of the big, broad-based listed investment companies. The stocks like AFIC, Argo, and Milton, Sell those. If you want a broad-based portfolio, go back into the ETF.
Why haven't they gone?
Because they don't. For some reason, people can't calculate the NTA, right, and can't work out if the market goes down 10%. Those stocks are roughly going to be down by pretty close to 10%.
So AFIC shareholders are a bit like ABC radio listeners. They're rusted on.
They're rusted on.
Yeah.
Those sort of stocks have moved from a small discount to a big premium.
Yeah.
When they're a premium, they're only their selves.
Yeah.
And if you want to buy the ETFs that actually track the move as the market goes up and down, much better strategy. Conversely, there's some other stocks that are cheap, Peter. So I think sort of the hybrid market's getting on the cheap side. Yeah. This is a time to be, you've got to be a little bit brave. You're not going to get the bottom.
Okay. So your one stock that you think looks like an absolute ripper to buy now, and in a year's time you say, gee, that Rickard was a smart bloke?
Well, I'm not. I think some of it's already happened, Peter. I think Westpac at below $20. I've been a Westpac fan for a while, and I've been wrong. Broken record here, right? But we got to 1950. I'd say that was the one. I think that we saw some good opportunity when CSSL broke down at about $280 on Monday. I'm probably more buying things that I think are mispriced. In things like, I think there are some bargains out there that aren't going to be repeated. Yeah.
Well, from my point of view, I'm a bit of a fraidy cat when it comes to these times, but I like buying companies like CBA, because I do think in a year's time the share price will be higher. I think all the economic stimulus will improve the Aussie economy, and interest rates won't be cut. They may eventually rise in 2021, little amounts, but it'll help the banks.
I think some of the resource companies look all right. I mean,
BHP?
Look, whether I'd go after yesterday's rally, but I mean, BHP's still saying the iron ore price is holding up very well, and if you look at the data, it is. So, it's sort of...
It's going to be bad, I think, for 6 months, but after 6 months, the global economy will improve, and BHP and iron ore will do well.
Yeah, so I mean, I think you might have to be a little bit brave. I mean, we were talking about this on Monday, and I said, Charlie, what do you buy? I still felt resources and banks after Monday probably look best. Yeah. They actually worked the hardest yesterday. Yeah. I'm not sure I'm a buyer today, right? Because I think we've seen sort of, you get the move up, you get the bounce back. It'll probably do, as I said, go a bit higher. I'm not sure people are yet ready to say this is the bottom. So selling will come back into the market. So I'm not sure this is a buy day. I think this might be a day just to sort of wait. And we saw the same in the US. The US had retraced about half of what it fell on Monday.
I want to wait until infection rates in Europe start looking a lot better. Then I'll go in big time.
So you're a scaredy cat, whereas I'm a little more...
very brave. Very brave.
A little more courageous.
Opposites. Yeah? I'm entertaining. He's boring. He's courageous. I'm a scaredy cat. But we're a good team. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.